Hello everybody, Shaf Rasul here and welcome to today's episode of Ask Shaf Live. Now, if this is the first time you've ever been on my channel, let me tell you a little bit about myself. I'm a serial entrepreneur, I'm a former dragon on BBC Dragon's Den Online, and I'm a columnist for a national newspaper. For today's episode of Ask Shaf Live, I've asked my commercial property solicitor Murray Stewart from Gilson to join me. So Murray, I'll be helping me tackle some of your questions. So, Murray, thanks for coming to the channel. Do you want to just tell my viewers who you are and basically what you do for my companies?
So I am a partner and the head of commercial real estate at Gilson Gray. So we are a progressive full-service UK commercial law firm, and we were one of the largest launches in Scottish legal history when we opened our doors back in 2014. Gilson Gray have acted for Shaf and his group of companies since we started in 2014. And indeed, one of our consultants acted for Shaf for many years prior to that. So it's a very well-established relationship. But one of the first transactions that I did for Shaf and his group was the refinancing the property companies in 2014. So that was how we started out our relationship together.
I think the first deal you did for us was a parade of shops, wasn't it? We just bought them, we asset managed them, we sold them back out.
Yeah, that was Hull Hill in Glasgow.
So we extended a few of the leases and then basically sold it back out. Well, yeah, that was a good deal. Okay, so shall we jump on to some of the questions? First question is from a chap called Adam S. Shaf, we're two trusted friends. We have 50k cash in total for a joint mortgage. Looking to buy a 2-bedroom house in the next 6 months at around 380,000 in London. Add value, right? So it's a rundown, desperate seller, can get planning permission for 2 more bedrooms. We'll live in there until we get it done in a year or two, remortgage and go from there. Got friends in a renovation business, so that's a jackpot. We both earn 38,000 a year. Does that sound, one, does that sound crazy? Two, so let's start off with, can 2 trusted friends get a mortgage? I personally don't see any issues with that, do you?
No, I don't see any problem with that.
Okay.
And in terms of the capital that they've got available, that allows them a 13% approximately down payment on a mortgage. So again, that seems like sounds like a reasonable amount.
Okay. So point one, does that sound like a crazy plan? It sounds okay to me. It sounds reasonable enough. What do you think?
It doesn't sound like a crazy plan. I guess the thing that occurs to me is if they are using their money to fund the down payment and they have limited income, how are they going to be funding the work?
Yeah, I was going to jump onto that bit next, actually, but that's cool. So we've pointed that out. So point number 2, as a first property, should we form a company and buy it, or just on a personal joint mortgage? Problem with forming a company, Murray, is going to be that they're certainly not going to be able to pay a 13% deposit using a company. The deposit will go up substantially. So that, they may have to pay a 25% deposit. So I think a personal joint mortgage is the way to do it. 3, they're saying, should we start a business? No, they shouldn't start a business, because then they won't, as it's their home, if they buy it in their own names, okay, they won't have to pay tax on the exit.
That's absolutely right. If they acquire it in their own names, then they will both have an annual capital gains tax allowance that they can use to offset against any gain they make on the disposal of the property. So that makes perfect sense.
But what I'm trying to get at is if they buy it in their own names and it's their own home, it's a mortgage then, so they don't actually have to pay any tax.
Yeah, there was a point slightly earlier on, and I was also going to mention SDLT, and if it was there, and just kind of a warning on whether they owned a home elsewhere,
Okay, let's assume that they own a home elsewhere. They can't get a mortgage for it. So this is the situation, guys. If this is genuinely your only house, your first property, and you're both going to be living there, it then becomes your home. Okay, and the 13% deposit works, assuming you've got money for the renovations. If it's a second property, you won't be able to get a mortgage on the terms that we've just talked about. And obviously, SDLT is something you're going to have to look at as well. They go on to say, any tips?
I think the point I would make is you're going to have to give some serious consideration to how you end up phasing the works to the property, because it can be difficult to carry out renovations wherein you're actually living in a property. And also, if you've got separately any property that you let, it's important to make sure that all of your utility bills, driving licenses and such like are transferred to the property, because you are going to need to demonstrate this is your principal residence to benefit from the capital gains tax exemption.
And Jim Fiaz, hi Shaf, could you do a video explaining the concept of sale and leaseback? Yeah, that's dead easy. How sale and leaseback works is, let's say we've got a company, okay? So we'll call it Widget Co Limited. Widget Co Limited own their own warehouse. What they do is they put a lease in place with their company, okay, Widget Co Limited, to lease the property at a market rent. Okay, so that property then becomes an investment to somebody. So they put a lease in place. Widget Co Limited is leasing that property for 10 years at £100,000 a year. Okay, they then offer that out as an investment. So somebody like me would go along and buy that as an investment. So I would say, right, I can buy a building with Widget Co Limited, okay, and they're going to pay me £100,000 a year. And I may buy that building for £1 million. And I say, that's a 10% return. So that's how a sale and leaseback works. You're selling the building, but you're leasing it back, and you're putting a lease in place. So you're selling the building to an investor and you're putting a lease in place. So that is essentially a sale and leaseback. A lot of companies use this model. For example, RS McCall's, the newsagents, they do that quite a lot. You'll see a lot of their properties coming in an auction where they put a 15-year sale and leaseback in place.
I think that's a really good summary, Shaf. The seller gets the benefit of releasing capital that's tied up in their real estate assets, which they can then put to work in the business. The purchaser gets the benefit of the income under the lease, and the seller gets the ongoing benefit of occupation and use of their business premises.
Benjamin M, I understand stamp duty can be a big bill for investors. What are the thresholds in stamp duty, and does trading under a limited company affect the stamp duty bill? Benjamin, what we'll do is I'll basically throw the thresholds on the screen, okay, and we'll leave them there. Does trading under a limited company affect the stamp duty?
Yes, there's a surcharge if you are acquiring residential property in a limited company. So generally 3%.
What we'll do is we'll put the relevant information on the screen. We'll put a couple of links in.
It's just worth picking up here, Shaf, that there's different stamp tax regimes in England, Scotland and Wales. So in England, we have stamp duty land tax, SDLT. In Scotland, we have land and buildings transaction tax, LBTT. And there's a separate tax in Wales, which is land transaction tax, LTT. There is a surcharge applying where residential properties are bought in the name of a limited company. So under SDLT, my recollection is the surcharge is 3% across the board.
Burning desire. I've not asked anything for 2 weeks. Was thinking, do you agree with a lot of wealth creation can be generated in this recession if we wait and invest in the right time? Burning desire, I think you're right. Absolutely 100%. A lot of wealth can be generated in a recession. A lot of companies will get into problems, and they may go into a process such as administration or liquidation, etc. So effectively, what I will do is I will do a video in the next few weeks showing how to buy properties and that have gone into a process and into an administrative or an insolvency process. It'll give you the tips, the pointers, etc. And hopefully that should help you. So Murray, have you got anything to add for Burning Desire?
What I would say is it's less about timing the bottom of the market unless you are a very experienced investor. And I think it's more about identifying relevant opportunities. And that's going to depend upon your strategy. And that strategy might well involve looking for distressed or motivated sellers where you can acquire assets below market value. But equally, what you might be looking to do is acquire assets where they can be actively managed and you can add value that way through increasing occupancy rates, through repurposing properties. So I think it's more important to identify what you can do to add value if you're a less experienced investor rather than simply trying to call bottom.
Callum, quickly. Callum's creating an app, okay? And he's wondering if he should do it in his own name or do it in a limited company. He intends to monetize the app. I mean, for me, it's a no-brainer. It should be done in a limited company, okay? Because that just protects you personally.
Absolutely. The benefit of the limited company is limited liability.
CB, my brother and I own 2 properties. We bought them 12 to 15 years ago. Very low interest only mortgage. This was before the crash. The properties are now worth what we paid for them, but we've only paid off the interest. Should we leave it as it is for the next 10 years at no cost or profit for us and hope they go up in value for 10 years and remortgage and start repaying? What do you think, Murray?
I think it's important for you to get the properties professionally revalued, but if the rental that you're receiving is only just covering your interest payments, then I think you need to be calling this a day, selling the properties and moving on, because what you have is a liability and not an asset.
It's a very difficult one, this, isn't it? Because they're not making any profit at all.
Yeah, because they're retaining liability for structural.
Yeah. I mean, let's pretend you're advising me here. If I turned around to you and I said, Murray, I've got 2 properties, they just break even. What do you think I should do with them? Your advice to me would be, Shaf, get out of them. Whatever cash, whatever minimum amount you've got, just get it out, just take it out. The other thing CB is saying is you're talking about limited companies. Shall we look into these for the above houses? No, it's too late to do that, mate. It's just going to cost you a cost. I mean, the only thing I would suggest to CB is if you've got them on a 6-month let and you can maybe get these away as serviced accommodation, it's going to be really difficult, perhaps double your or treble your income. That may be worth exploring. If that doesn't work, I agree with Murray. Just get out of these. David McPhee, I have £40,000 saved up for investing in property and I'm looking to get a buy-to-let. Would you recommend going for a discounted house around 35k or getting a mortgage for a house that needs refurbishing and renting out? Should you do BRR with the money? David, how I grew my portfolio was doing BRR. You need to understand the strategy because it's the strategy that most property entrepreneurs use. Okay, that's personally what I would do, but it depends on your level of risk. And I think it depends on your level of risk because BRR is slightly more riskier than just buying a property on a buy-to-let and then renting it out. But it does offer you the opportunity of generating more wealth. So what I would do personally is I would research BRR. I'm going to be doing a video about it at some point. My first Ask Shaf Live special, which is coming out, to an extent covers BRR, but it's for a commercial property. But that's what I would do personally. Now, this may not apply to you because what I do is totally different from what you guys do. That's my advice.
David seems to be looking at simply buying one buy-to-let property. And there's scope here for David to gear up, take on debt, and actually use the capital that he's got to buy more properties. If he ends up taking on buy-to-let mortgages, he could buy 2 first off, and he'd probably be in a position from the income he's generating to buy a 3rd property within 18 to 24 months.
So there you go. You've had 2 different views from 2 different people. David Cato, I'm going to inherit a house soon where my elderly mother is the tenant on pension credit. Would I be better putting it in my own name as a standard rate taxpayer, an LLP or a limited company? Once she has passed away, I would sell it as it's a fair distance away from where I live.
There's a lot going on here. Dealing with the LLP idea to start with, an LLP's tax transparent. So there's really not much to be gained by you there using an LLP structure, and generally use structures for tax reasons. That's one of the primary benefits. And a limited company is generally used for buy-to-lets because of the more favourable tax treatment of mortgage interest in particular. Now, it doesn't look like there's going to be any mortgage here because you're inheriting, so it's not clear that a limited company is going to be of much advantage to you either. Assuming that you're a basic rate taxpayer still, taking into account the rental income, the rate that you're going to pay in a limited company at 19% really isn't very different from what you'd pay as a basic rate taxpayer at 20% either. And you also need to bear in mind that you wouldn't get the benefit of a capital gains tax allowance if you acquired in a limited company either. I think probably the thing that you need to look at first here is the ability, possibly the person who you're going to be inheriting from, to go and do some tax planning with them now. So go and speak to a succession planning lawyer, because if they're able to get that property out of their estate now, then they will potentially avoid an inheritance tax liability, which has got to be of benefit to both of you.
Excellent. It's good having a lawyer on the channel, isn't it? Guys, listen, I'm going to be doing a video on limited companies owning properties, because in some circumstances it's beneficial to have a limited company or even an LLP, and others it's not. And I'll try and do a detailed video about this. Ishman Siddiqui, what advice would you give to somebody who has 80k in cash and wants to buy 3 to 4 properties in a buy-to-let mortgage with about 20k deposit? Ishman, I've answered similar questions to these in the last 9 episodes of this particular series. Now, what I've done is I've put timestamps in the description for each of these questions. I would suggest you basically go through them and have a look. Once you've been through them and you've got specific questions, I'm happy to answer them. But I think the first step is, rather than me boring my viewers by dealing with this again, is just go through and have a look at the previous questions I've answered. John Gallagher, what would you recommend I teach to my children? I feel my 4-year-old is too young, but my 7-year-old is super sharp. When I was younger, I used to work in my parents' newsagents, okay? So I understood from an early age what it was like to earn a little bit of money, you know, a few pounds a week for helping your parents out. I also, from an early age, understood the value of money. I understood how to buy a product because I would see my parents doing it. I think you need to sort of instill that into your children. Now, I'll tell you what may be a really fun way for you to do this as a family. I'm doing a thing called Furu Fight. There's something come up on the screen right now. Why don't you do this as a family? What you could do is just take £200 and as a family, see if you can grow that into a bigger amount. So that's what I would suggest you start, but you need to make it fun, that your children understand about finances, etc. Lokesh wants to know how you find the best people: property solicitors, accountants with good knowledge on property, good builders, etc. I'm really struggling with this. Any tips, please? So what I do, Lokesh, is when it comes to property solicitors, I've had a relationship with Gilson Gray even before it became Gilson Gray. I went and asked my friends, I said, who is the best property solicitor in Edinburgh? And I got a list of about 4 names. I went and spoke to all of them, and the best one transpired to be a chap called Andy Birrell. Okay, so Andy became my property solicitor at a firm called Shepherd and Wedderburn. He then basically moved
That's right.
to a firm called HBJ, which became Adelshaw Goodad. And then when Andy retired, he became a consultant for Gilson Gray. So again, I went with Andy because Andy was my go-to guy for property, and he managed the account. But gradually, Murray has taken it over, and Murray, in my mind, has proven himself to be one of the best qualified property solicitors in the UK. You can see from the way he's answering these questions, he gives you measured, sensible advice, and he provides all the downside risks. So that's how I find my solicitor. It was just basically recommendations. Builders, etc. I mean, it's really hard to find a good builder. We've got a pool of 2 or 3 contractors we use. When you're going past sites, you'll see their signs up. This site is managed by such and such, or this site is getting renovated by such and such. Just take a note of it, and then just interview them, sit down with them, have a coffee, and have a pool of about 2 or 3. The obvious other solution is to hire a project manager. It's not expensive, and they will come up with some good contractors for you.
I think what I would add is word of mouth and recommendation. There's a lot to be said for it. And then to get the best out of your professional advisors, it's developing a relationship over a period of time and working closely with them. The more information you give them, the better they are able to advise you, and the better you're able to work together.
I think one thing I should ask is the level of working relationship I have with Murray. I reckon I just call him once a week just for a chat, just to tell him what I'm doing. I'm saying, Murray, I might buy this, I might not buy that. I was looking at this, I've done that. So, and he's already, by the, I'm telling him about things. So there's a sale and leaseback we're looking at the moment. We signed an NDA for it because it's a substantial sale and leaseback. But Murray's already aware of the situation, how I'm going to fund it, what the SPV is we're going to set up to do it, because we're thinking about doing an SPV, so because it's quite a risky one, how we're going to fund it, etc., etc. So I think just keep in touch with your professional advisors. Lorraine, would you put your own home in a limited company with a view to renting it out? Lorraine, I've covered this loads of times in the last few Shaf videos. I'm going to do a detailed video about this at some point in the future, but no, I don't think that's a good idea. But have a look at the previous videos and some of the questions I've answered.
You'd pay a 3% surcharge if you were acquiring a residential property in a limited company.
Yeah.
So that's in addition to the standard rate.
Louise McGill, how will you pick people for the £200 challenge? Louise, if you go and actually have a look at the video, you'll see in there, but definitely enter it, Louise. I think it's a great bit of fun. It's a great competition and it brings awareness. If you guys don't know what I'm talking about, there's something just come up on my screen now, so have a look at it, check out the video, please. How do you potentially go about gauging where the potential bottom of the market is? What are the telltale signs? Every day I speak to property people, okay? I speak to solicitors, I speak to estate agents, I speak to surveyors, I speak to people that are doing property, people that are buying property, I speak to people that are selling property. And I just see what's happening with the market, whether the market is firming up, whether this transaction's going through. What I will do is on Ask Shaf Live, I will definitely keep you guys updated as to where the market is. Murray, have you got any telltale signs as to the potential bottom of the market?
When you start getting excited.
Brilliant. Thanks. Liam Shah. Right, this is quite a big one, Murray. What do you think of this?
You need to get a accountancy advice specific to your circumstances.
I'm trying not to give bespoke advice because I'm not qualified to do that. I think you need to get bespoke accountancy advice which covers your circumstances here, because there's a lot going on. Do you know how to trademark a name or phrase to use in the future for a product or company in the UK? Yes, I do. I just instruct my lawyers to do it for me. It's not very expensive. I think they charge me about £500 to trademark something. You can do it yourself, but personally, I just pay the extra and just let the lawyers do with it. So Gilson Gray has a specialist trademark lawyer that deals with it for me. Or if I'm not using Gilson Gray, I'm using a different firm, they'll do it as well for me, depending on which company needs the trademark. So if it's property related, Gilson Gray will do it. And if it's non-property related, I'll get a different company to do it. Is change of use for commercial property a very expensive process? Is it a very lengthy process? Michael, that's like you asking me, Shaf, how long is a piece of string? Each and every case is different. Now, in terms of, is it an expensive process? I've got a case study. Okay, I'm going to put a link up for it. Watch this video. Was it a lengthy process? This whole process from start to end took about 6 months. Okay, so have a look at this video, but this is just a generalization. You know, there's been cases where it's taken 6 months. There's been cases that we've dealt with in our own projects that have taken a number of years.
What I'd add there, Michael, is it depends what use class you're currently in and what use class you're wanting to change to. So there's actually some permitted change of use between classes that don't require planning permission. So class 2, so professional and other services, you can change the use to class 1, which is essentially retail. And if you've got a building which is class 3, food and drink, there's permitted change of use to class 1 or class 2. Obviously, if you're looking at a more substantial development project where there's a change of use from commercial to residential, that's a different matter.
Brilliant. I do like the way DueDil works, but it seems really expensive for what I need. Are there any alternatives you could recommend for somebody that's starting out? I think Dun & Bradstreet do something very, very similar. I don't know what the charges are or anything, but just Google it. I do know from time to time, DueDil do a special offer where you can get a trial version from time to time. When I first started, I got a trial version of DueDil, and I don't think it cost me any money. And I've seen, emails going out occasionally where they do that. So just keep your eye open, and you may be able to do it on that basis. But have a look at Dun & Bradstreet. Nick 2017. I answered Nick's question a few weeks ago, and Nick's saying the reason why he had to use bridging finance is he may get blacklisted by lenders. Nick, to be honest with you, I don't know if you will get blacklisted by lenders for using bridging finances in those circumstances. But what I will say is I will have a guest on that is an expert on bridging finance because he owns a bridging finance company, and we can put that question to PBR. eBay research tools listed, can the costs be claimed back as a business expense? Yes, they can be, absolutely, because it is a genuine business expense. So yes, you can claim the costs back. Safe Chowdhury, is it a mandate to use solicitors to read legal packs and using a chartered surveyor to check the quality of a house before purchasing a property at auction, because they might charge you fees and you did not end up buying the property?
No, it's not mandatory, but if you don't, you do so at your own risk, because at the point the hammer falls and you're the successful bidder, you've essentially purchased the property, warts and all, and there's nothing that can be done at that stage if there's any issues with the title, or if the property's not in the state of repair and condition you thought it might be. So I would recommend you speak to an agent, speak to a solicitor in advance, agree some kind of arrangement where if you're not the successful bidder, they might charge a reduced fee, but ultimately you should get professional advice up front.
Safe, I think I covered this with my interview with Adam Pye. I would go and rewatch that interview. We'll just come up on the screen showing you which episode it was. But I would genuinely never ever buy a property from an auction, especially a vacant property. An investment property, I may consider it, but a vacant property without basically getting it surveyed. I just think that's just nuts, because there might be some underlying fault with the building, and that's the reason why it's appeared in an auction. So me personally, I wouldn't do it, but I suppose it depends on your risk appetite. Stuart Hendry, I'm new to property. I've invested several thousand in courses and mentorships, and your videos are interesting as I'm trying to discern the furus from the genuine. I am interested in rent-to-rent as I don't have a large amount of money to start buying houses. As you highlighted in other videos, rent-to-rent isn't quite as easy as the furus say, and in fact, from what I understand, you view the prospect as fully undesirable. However, I need a cash flow mechanism as a new person wishing to start a property investment company. So my question is, what strategy would you suggest I use? I'm going to be totally honest with you, okay? Rent to rent, the way I see it, it's just a way of getting a job as a property manager. Yeah, you can do that. Basically, you'll be managing some properties, you'll get a little bit of experience, and a few years down the line, you might have saved enough money to save up for a deposit to buy your first property, whether it's a BRR or whatever. But the only strategy, in my opinion, that works like the furus teach is BRR. My only advice to you, Stuart, is you're just going to have to save up, okay? You're going to have to think of some way of basically generating income which you can divert into property. And that way might be you do rent to rent and you become a property manager. It might well be you have a small trading business and the profit you generate from that, you invest in property. Or the alternative is you stick to your full-time job, you save up enough money for a deposit and you buy your first property.
Oh, I agree with that. I don't think there's any magic pill.
Thomas Moran, why do you think your best skills in becoming so successful? I think my best skills are, one, I analyse stuff in a great deal of detail. And secondly, I think out of the box. So that's the two skills that I think have made me successful. What do you think, Murray? What skills do you think I've got? You worked with me for ages that allow me to generate the sort of wealth that I do.
I think the things I'd pick up on is focusing on your niche, an area, a sector of the market you know well. So in your situation, Shaf, it's knowing your local patch and limiting yourself geographically to an area that you know like the back of your hand. Always having a plan B. As you say, you tend to analyse your acquisitions thoroughly in advance, and we've spoken in the past, and there's not just a plan B, there's generally a plan C and D in every instance as well. And to take advice. There's no point having professional advisors and then ignoring them. So listen to your agents, listen to your solicitors, but ultimately make your own decisions.
Truth teller, is leasehold a national scandal? Do you see the government abolishing leasehold and making developers sell freehold? Quite a pointed question, isn't it?
So leasehold is it's really more of an issue in England and Wales than it is in Scotland. Certainly the situation where punitive ground rents continue to be charged and reviewable on a regular basis upwards only, so that there are really significant amounts being paid on an annual basis towards the end of the term, that's not sustainable. What I think is leasehold, we don't want to throw the baby out with the bathwater. It has its purposes. It's a very good way of regulating common areas, common maintenance, but it does need reformed, and we need to ensure that the profiteering essentially is brought to an end.
Excellent. Thank you for that, Murray. It was good to get a lawyer's opinion on that question. UK SH492. I'm looking to purchase my first residential investment property, planning to renovate and sell, but could rent, and have approximately 45,000 in savings plus 40k equity in my main residence. I'd ideally like to use a limited company for the reasons previously outlined. I'm considering 1. Remortgaging my current property to release the equity into my hands. 2. Take the combined savings and remortgage funds and loans to a new off-the-shelf limited company. Purchase the property in the limited company as a cash buyer. 4. Apply for an unencumbered mortgage on a property in a limited company. 5. Repay a portion of the DLA from the mortgage funds at 4, amount equivalent to the additional borrowings on a personal residence. So UK SH492, I'm assuming you want me to make the decision. From what you've said in there, you know exactly the various options that are open to you. Do you know something? The best person to make this decision is you. Okay, each and every one of these questions and these points that I've said, I have given my view on them. But what I can't do is make decisions for my viewers, because that's wrong. You know, you have to basically make that decision. You have to decide if this is the right approach for you or it isn't the wrong approach for you.
SH492, I think ultimately the decision here rests with you. What I would say, and I don't know to what extent you've taken account of this, is at the point where you are remortgaging in the limited company, you are going to have to leave some cash in the deal at that point in time, and you have to be aware also that you could find yourself being asked for a PG in those circumstances as well. So just to be aware of that, and also you should probably expect any director's loan into the limited company. The bank will expect you to defer that to the bank's lending as well.
So, Murray, I think that's us finishing the questions for this week. Have you got any words of wisdom or any advice for any of my viewers that wanting to get into commercial property? Is there any deals that you've done on behalf of my company that you think the viewers should know about, that you specifically thought, oh, that's clever?
One certainly that springs to mind was an acquisition at Sighthill in Edinburgh, where we bought the building for 1.1 million first thing in the morning, and had sold it by the end of the day for £500,000 profit. And I know that Shaf is intending on doing a separate case study on that particular transaction. But the profit there arose from on the one part, a failure on behalf of the vendor to impose a use restriction, which we exploited, and secondly, active asset management before we even bought the property.
Yeah, that was a great deal, wasn't it? I think so. We actually took bank funding on that, right? We bought the £1.1 million for just literally, it was about 2 hours, wasn't it? It wasn't a bridging facility or anything. We just drew it down against our RCF, which is our revolving credit facility. But that'll make a great case study, and I might get you back on for that. But before we go, have you got any tips for my viewers if they want to get into commercial property?
I think what I do, Shaf, is just revisit our responses to a number of questions. I think it's important to take professional advice, both from agents, from lawyers. Do so really early in the proceedings, not at the 11th hour, whether it's an auction, property purchase or otherwise. Make sure you're giving your professional advisors full disclosure. as much information as you can about what your proposed strategy is, not just for this property, but going forward, your financial circumstances. The more information you've got, the better able they are to help you.
Excellent. That's perfect, Murray. Listen, thank you again for coming on the channel, and I'll catch up with you soon. So that's another episode of Ask Shaf Live over. Can I ask you to do me a big favour, please? Can you stick some questions down below if you've got questions? And also, if you've not subscribed to the channel, can you please subscribe? Thank you very much.